Good evening, everyone. Welcome to my Market Structure Break live stream. A new month has started, a new quarter has started, and this is why obviously I have picked the following headline that you can see here, hopefully in front of you. A new quarter, Euphoria to be crushed, or is the uptrend going to continue? Well, guys, I have a packed stream for you. But first of all, let me know whether you can hear me well, whether the sound is okay. If you can just let me know in the chat, that'd be great. Also, whoever is watching live, post in the chat, where are you from? What are you currently trading above all? Well then, let's jump right into it and let me show you what I have planned here tonight for you. For that, first of all, let me open up my short little PowerPoint presentation. Hopefully you can all see it, guys. On our agenda, so to speak, today is pay attention, don't you see it? What I'm referring to, well, we will get into more detail later on when we have a closer look at this part of the SPX chart. But first of all, let me quickly tell you what I would like to do with you tonight. Obviously, we are going to look at the SPX as we always do in our weekly analysis, and also look at the NQ, the NASDAQ, and BTC, as BTC remains to be strong, even so pushing up against resistance. I would also love to tell you something about myself, about Market Structure Break and the idea behind it, before we hopefully can finish off the evening with some open questions and a summary of what we've found out tonight, what we can see in the charts, and what this basically should mean for us today. Going forward to my first point on my agenda, and the question, why do I focus on charts only and not necessarily on the fundamentals in the chart? This is what I would like to address before we jump right into the analysis of the SPX and try to answer the question whether there's really mayhem to come back, or whether we are really in a new and strong uptrend. So why charts only and not fundamental analysis and the news? Personally, for me, there are different advantages of looking at the charts and solely at the charts. I've listed them here. Let me try and explain them to you. First of all, for me, the trade idea simply is recreatable at any time if you focus on the charts. Let's be honest, do you still know what the news was, what the fundamentals were, what the economy looked like 2, 3, 4 years ago? Maybe on the surface. And it can't be recreated that quickly. However, if you pick up the chart again and you just look at exactly that part of the chart, you will see what happened back then and why you took a trade, or why you should have taken a trade, or why you decided not to take a trade. At the same time, this approach is a lot more time efficient. Again, be honest to yourself. The economy and how it works nowadays in a globalized world is very complex. It is influenced by numerous factors. It is basically, as far as I'm concerned, impossible to have everything on the radar. You would just need a lot more time, the way I look at it, if you approached the markets with that kind of mindset. While if you have a clear idea of technical analysis at the back of your head and you use it over and over again, this is becoming more and more time efficient. As you'll see also tonight, we want to go through an analysis from scratch. I'm going to show you how exactly I mark up the charts and how I then use this color coding and marking up of the charts to find my trade setups. And even more importantly, it's not only time efficient, it also gives you control because you yourself create the framework that you use. And by that, if you stick to your rules, you know exactly where, and you know very quickly also when you are wrong. And finally, and this also shouldn't be underestimated, charts are fractal. Whether you are looking at the weekly chart, the 4-hour chart, or the 15-minute chart, whatever you find on one chart in one form or another, very similarly, is going to turn up on the other time frame as well. Charts are fractal, and this then can also help you to identify various trades on different time frames. However, this is why I wrote it down here as well. Know that you might look at conflicting trade signals. How you can deal with that is also something I would like to touch upon later on a little bit. Why I'm such a strong opponent of the charts only approach becomes pretty explanatory or pretty simple to understand if you know something about my personal start into trading and my personal, basically, let's say, crypto start. Yeah, so let me show you what I mean. Ethereum was the first cryptocurrency that I bought in 2018, more exactly in June of 2018. I've marked it here on the chart. Wonderful point to buy into Ethereum, wouldn't you think? Well, obviously not if you look at the chart from a charting perspective. However, you're looking here at the daily chart. My thinking was, well, we're already down 62% from the all-time high. This has been quite a while since we were at the all-time high, so how far can price still fall? Not too much, certainly, right? It must go up again. Well, you tell me, 3 months later, another 62% down and another 56 until we finally bottomed at 72%. In other words, you need to know when you are wrong, and the easiest way for me personally to know when I'm wrong is to approach the charts from a technical analysis standpoint. Yeah. And not just looking at them from a fundamental or news-driven approach. I mean, it probably would have been pretty easy. You wouldn't have needed too much to identify when you should actually buy in. Let me quickly show you to illustrate that a bit better. This is the Ethereum chart from back then. Now, if we just hide what I marked out here and have a quick look at the chart from back then, the time in question, June 2018, I bought my first Ethereum. Yeah, must have been around here because in euros I bought it at around 440 euros. Nonetheless, where was the last significant lower high? At around here, 530 euros. So really, for an uptrend to start, price should have broken this level, and then I would have or might have considered buying in around here. But certainly not just blindly at around 440 euros. then we broke this low, and this would have made this lower high the high to beat, to be sure that at least there is some potential for the trend to change. This never happened before we broke this low, making 430 euros the next significant swing point to break for a trend change. Breaking this low again, probably you would have said, well, beat 277 before you're really interested in longing. Same story here, same story here. You can repeat it over and over and over again. And when did it finally happen? And we broke a significant swing point? Well, at the end of December 2018. And all you then would have had to do is throw on some fibs, be patient a little bit, and all of a sudden you would have been able to buy in at around 92 euros back then. Spectacular. Write it up from there. Price never came back to these levels, only during the Corona crash. Well, I guess with all of that said, you get a better idea of why I am a big proponent of focusing mainly on the charts and not too much on the fundamentals. So where did all of this leave me? What is my overall opinion because of that? Therefore, you need a clearly structured and easy to following analysis process and trading strategy to be successful in the markets. And it can be with such an easy approach as I have just showed you. Just simply follow the daily or even the weekly trend, and you will miss, in inverted commas, experiences like mine, experiences like being down 62% before being down another 62%, before being down another 56%, and then in the end not buying because, well, why would you still buy now if you have no clue, no freaking clue about technical analysis? With all of that, let's jump right into the charts and let's really go through the SPX chart let's really go through the SPX chart from scratch. And for us, that basically means let's look at it top down, starting off with the monthly chart. And the monthly chart really indeed is what is very, very interesting and shouldn't be underestimated. As always, you want to identify crucial levels and the level to be beaten if you want to be able to say a new uptrend has started, certainly is the level of around $4,133. And this makes tonight, and this makes this beginning second quarter really, really interesting from my point of view. Why? Because if you look at the closing price of the candle of March 23, we are looking at a closing price of $4,137. In other words, the monthly downtrend on a closing basis can be considered broken on the SPX. That is massive. A very, very bullish development from my point of view. Does that mean you have to long immediately? No, because otherwise we would be done and we could close out the charts right now. But nonetheless, it is something to be noted, something to be paying attention to and asking yourself, don't you see it? If you don't, then I think you might be in for some surprises. Continuing with our analysis, we can use the object tree here on TradingView to the right. This is the symbol. and then start a folder monthly. I always call it levels. What are other monthly levels that we might be interested in? Well, certainly I would say we want to mark out our monthly swing point here. So the latest higher low we have, and potentially also the level of around 3,969, and obviously the lowest point 3,594. All of that goes into our folder monthly levels. What's the second step? Well, you have to ask yourself, where does liquidity rest? Where do people put their stops? Above the wicks. So monthly liquidity certainly will be found above around 4,208, and if we can push higher, again, I would say this swing point should be very interesting for us, the level of around 4,327. To the downside, well, it's not like these are equal lows, but at some point I'm sure some of these lows will be taken out. So let's simply mark out the highest wick point we have here, to be able to be alerted once price, or should price, hit the level of $3,839. Now, from my point of view, you really have marked out all the monthly levels that you should be interested in. Another thing I then always like to do, and I highly recommend you do, is identify my so-called target boxes. As we are looking at a bullish chart, you should mainly focus on bullish target boxes. In other words, see or look at the 618 to 786 retracement fib based, and this then gives you a monthly target box starting at around $3,801. In other words, should we make it down there, you should be bullish and should really look for a longer term long setup. Also, where is our next bigger resistance target box? If we take that swing point, project it all the way down, then you can see that we have already wicked into it, then rejected it, and are now apparently going for a second try. We will enter the bearish target box on the monthly starting at around $4,175, and it goes all the way up to around 4,333. Coincidence? Question mark. What do you also find there? Liquidity, monthly liquidity. There are no fair value gaps that we can identify on the monthly, at least none that would be of bigger interest for us at the moment. However, where did we bounce from? From a monthly fair value gap. Yeah. All of this I would put into a folder that I normally call monthly boxes. Before we then move on, let's quickly maybe write down what our key levels of interest are on the SPX long term. We have monthly bullish target box starting at around $3,801. And we have a, I would say, crucial support level because it marks the most important first higher low that we have on this new monthly trend, the level of around 3,860 and just slightly below liquidity at around 3,040. At the same time, even so, we are looking at a bullish chart here. Don't forget, we are entering an area of resistance again, starting at around 4,180 up to 4,210. Yeah. And again, more liquidity sitting at around $4,330. All of these charts, all of these price points, areas you should really keep in mind. So let's then obviously move down to the weekly chart and see what we can identify there. We'll go through the same process. Looking at the weekly chart, we see that the bigger term weekly downtrend remains, interestingly enough, unbroken. We have broken the downtrend on a monthly chart, which obviously, looking at it, first view, seems to be more important. However, on the weekly, the bigger term downtrend is still intact. So let's mark that out or write it down here on the chart for us not to forget. Nonetheless, obviously, we are in a clear weekly uptrend, higher low again. And the question now is, can we next week push up and close the week on a higher high? We don't know. About to be seen. Let's mark out 3,897. Where do we find weekly liquidity? Obviously here the same level, so we don't really need to mark it out. Same level here as well. More weekly liquidity resting underneath 3,786. All of these go into our box. Weekly levels. Right. Now, same story. Where are our target boxes? Our weekly target box lines up perfectly with our monthly target box, or nearly perfectly. Let's mark it out. However, don't forget we have a swing point here. We have another swing point here. So we don't necessarily have to come that far down for our uptrend to continue. So what you really also want to have on your chart is this weekly target box at around $3,889 as a potential pullback zone. What do I mean? Well, price could push up a bit further, then come back here and then continue its journey up. Certainly a possibility. What about resistance boxes? You can see that we are within a massive resistance box, actually poking our head through the 786 level at the moment. So not of that much importance for me anymore until we really reject. Nonetheless, if we project our resistance box from this swing point here, then we can see where do we end up again, matching perfectly well with the monthly resistance box as well. Where does that then leave us? What are the levels we want to have in mind with respect to the weekly chart? We have a weekly bullish target box starting at around $3,990 that we definitely want to have at the back of our mind. And again, the resistance box starting at around 4,180. As main levels, and here we already have confluence obviously with respect to what we've identified on the monthly. What we also want to mark obviously are fair value gaps, because they give further confluence. Price tends to be drawn to these fair value gaps. A concept that I got to know from ICT, the Inner Circle Trader. If you go to my channel, I've made several videos with respect to what I've learned from him. And obviously you can also go to his own channel and check out what he has there for everyone to watch and learn from for free. More weekly fair value gaps further down, and this now really gives us confluence, don't you think? If price decides to come back down, certainly the level starting at around 4,010 down to the end of our target box at around $3,950 should be of big interest. Let's maybe put it under bullish price points. So weekly bullish fair value gap starting at around $4,010. If you've marked out all of these levels, I would say basically you already have everything you need to be able to identify regular and potentially very lucrative trades. I just spotted another fair value gap up here, weekly fair value gap. Don't forget about that, starting at around 4,222. Anything else? Yeah, we smashed through this gap, weekly gap, during the week. Then to really frame our charts, let's finally go down to the daily, because here we really can get some context and frame whatever we've learned so far. And again, what do we see on the daily? We are in a clear uptrend. So really your main focus definitely should be on where can I long? Where are areas of interest that might draw price to them? Looking at levels, the first liquidity level I can identify sits at around 3,936 daily liquidity. And what do you know? What do you remember? We talked about liquidity resting around there when we were looking at the monthly chart as well. Where are target boxes? The closest target box from a swing point perspective lines up very nicely. Well, if you look at, if you want to be very aggressive, you could maybe project your fips from here, but so then you would have a daily target box starting at around $4,040. And obviously there are many fair value gaps that were created throughout the week with such a strong move up. However, as they are quite close price-wise to where we actually are, that's of interest. We have a gap here, wasn't fully close, but nearly close. So price might decide to come back there one more time, especially as it is lining up nicely with our weekly target box. And we have another fair value gap here. So basically a lot of imbalances in all of that area, which really leads me to believe that even if we push up a bit further, and there's nothing to say that we can't at the beginning of the week, we will eventually probably come back at least to the lower 4,000s before maybe going for a further push up, but that's too far ahead to just be dreaming and talking about it like that. All right, let me see whether we have someone in the chat. Questions popping up. Finally, obviously execution should happen on the lower time frames, mainly for me, at least on the 4-hour time frame. It's basically the last one that I use for marking out these levels. And if we quickly have a look at the 4-hour time frame, we see it is quite extended, and our projection here would at least again force us down to roughly $4,040, lining up nicely with the daily target box that we were already mentioning, or here 4,095, but that really would then be for a potential day trade. Yeah, what I would really expect is for price maybe to push up a bit further, take out these highs potentially, and then once you can create, at least on the 4-hour time frame, some kind of market structure break, you want to look for potential short setups to hedge yourself if you are currently long. And then once you are down in this area of the lower $4,000, then you really want to start to pay attention and see whether you can identify a setup to take price up again, to go long. Basically, what can we then say, summing up what we've learned here? It is clear from my point of view that if you look at the monthly, let me quickly get rid of our boxes here. If you look at the monthly, we are back in a bull environment. For me, this is absolutely massive, and let me quickly show you why I believe it is absolutely massive. Because going back in the chart, each time that happens, that we could establish a new monthly uptrend, the lows were in. And this is exactly what I also believe. We might come down to areas of around $3,800. I wouldn't rule that out at all, especially as we are approaching high time frame resistance. Nonetheless, the lows are in. That's what I would say. So my take is one more push up and then a nasty pullback, but this nasty pullback will give you a potentially amazing buy opportunity, for the longer term. Let me quickly show you what I mean. Ruling out maybe for the moment here the Corona crash, because that really was a black swan event. Wherever you go in the charts, whenever you were looking at a downtrend on the monthly chart, clear downtrend here. Once this downtrend is broken, if you're aggressive, you say the downtrend is broken here, and what happens, exactly what we just talked about. You get a nasty pullback, and this nasty pullback offers then an incredible buying opportunity. But even inside of a trend, you have this monthly downtrend. Once this monthly downtrend is broken, you're looking at several months of upside. It is retested, but only 1, 2, 3, 4, 5, 6 months later. Yeah, same here. Downtrend. Once it is broken, fire is on again. Downtrend. Once it is broken, you are looking at an up market. Nasty pullbacks included. Yeah. What about 2008, 2009? So many people talking about it. Well, you broke the monthly downtrend here. You consolidate 1 month. You take out these lows, fill in this candle, and then it is up only. Yeah. Same here. It's the same story over and over again. This is why, for me, what we've just witnessed the beginning of April is massive. Yeah. Downtrend broken with this candle in May 2016. taking out these lows, consolidating a little bit, and up you go. Don't underestimate that sign. That's why I said pay attention, open your eyes. I would say there are good weeks ahead of us. If you can identify a short setup at around these highs of 4,220, 4,200, 330, roughly, maybe up to here, take it, because I think we will see lower prices again. But these lower prices, maybe at around 3,950, who knows, maybe even a bit further down, these prices, I believe, will offer a massive opportunity for the longer term. Right, with that, then let's move on to our next chart, the NQ. No, before I forget, do you need more confluence? Well, then look at the DXY. A few weeks ago, I already mentioned it as well. The DXY can give you so much confluence and can make your trading decisions a lot easier. Let's throw on our levels for the DXY. What are we looking at? The dollar index on the daily chart. It is really correlated to the SPX. We were running into resistance here. We were talking about it at the latest on the 13th, 14th of March. You would have wanted to look for a potential pullback, a potential long setup forming in the SPX. Why? Because we had established a clear downtrend, daily chart trend broken on the DXY. Keep the 13th of March, 14th of March in mind. It is exactly when we were building out this swing point, forming our current lower high. Now, however, and this is why I also wanted to bring up the DXY. Now, however, we are sitting right smack within a box of support on the DXY. We have filled in a weekly fair value gap. We have wicked into a important weekly level, and we seem to be consolidating here. In other words, who's to say that we can't at least push back up into these areas of resistance before further downside on the DXY? And if we do that, this would correlate so well with what we were just describing. One more push up, take out these highs, get everyone really, really bullish, fill in this weekly fair value gap that has been sitting here since August 2022. I told you they tend to fill. This one did fill after years, guys. And then you pull back down for the real long trade that you're looking for, either at around 4,000 or at around $3,800. Moving on to the next chart. Let's have a look at the NASDAQ NQ. As you can see, I have my boxes ready here already. Nonetheless, let's quickly go through it bit by bit. Monthly levels. We have definitely broken the monthly downtrend with an incredible month taking us from around 12,000 to now $13,300 on the NQ. Actually, this one was even lower. Closing price of December was 11,022. If you have a close look, 11,035 here in September. So basically we broke our monthly downtrend. If you have a close look, that's why I am always saying pay attention to the bigger, higher time frames. We already broke our monthly downtrend with this candle on January the 3rd, then an aggressive push up in February, being rejected, everyone saying that's it, we're gonna go further down. But well, there you go, it's the monthly. Yeah, monthly boxes. As you can see, these are old boxes. Let's adjust them. An area that you definitely want to keep in mind is the level of around $11,890. Again, just like before, let's write down our key levels for the NQ as well. Maybe this time also for the midterm. Totally forgot about it. Sorry about it, guys. Monthly bullish target box starting at around $11,889. And to the upside, resistance can be found. I have already marked it out, but let me quickly show you. You pull your fips like that, starting at around $13,400. So we are again approaching resistance. Most likely, or not most likely, but potentially we are about to form out the monthly wick at the beginning of April, before then pulling back again to fill in some of this candle. Would just be logical, but could in the longer term still obviously be very, very bullish and give you an opportunity. Going down to the weekly, something very, very similar, obviously, to the SPX chart. The weekly higher term time frame, longer term downtrend hasn't really been broken. However, we are in a clear uptrend. Our latest weekly swing point sits at around $11,940. So this really, again, confluent with what we were just looking at, is of high interest. Let's add some weekly liquidity zones that we certainly have, with liquidity sitting underneath this level of 11,780. To the upside, coinciding here with our monthly liquidity. Do we have any fair value gaps? Well, we just pushed through this one, or we are sitting right in the middle. We're sitting right in the middle of this weekly fair value gap. We have filled it in. Will we be able to not fall back below? To be seen. Still not completely filled in. or not is this weekly fair value gap lining up nicely with the closing price for our longer term weekly downtrend, sitting at around 13,600. So the area starting at around 13,400 up to 13,600 or even $890 is of high interest with respect to resistance. Bearish. Target box wise, you should pay close attention should price come back down to the area of around 12,470, because here you have your first weekly bullish target box. And what is also very interesting is that there is a fair value gap lining up on the weekly at these levels as well. So you can see with these few levels already, you have a pretty good idea already of what to prepare for in the weeks to come. Longer term on the higher time frame, you want to prepare for maybe one more push up in line with what the DXY is doing as well. Could be up to around $13,800, $900 before you then can potentially expect a pullback down to the mid 12,000. Yeah, this is what you might see, and then there you might want to look for a potential long setup forming on the lower time frames. Speaking of the lower time frames, as always, let's frame what we already know with the daily. And maybe one more thing I would like to point out. If you look at the weekly time frame, there is an argument to be made that basically we are still trapped within this bigger range, starting at around 13,600, 500 up to 13,800, and then going down to this area of around $11,000. Yeah, so this is also a possibility that we chop around a bit more, maybe even go down to test the lows. However, as I've said with the SPX, I don't expect us to really break them anymore. Going down to the daily time frame, putting on our daily levels here. Is there anything that we want to add? Yes, maybe this daily fair value gap, but let's see whether we already have it on the chart. We do indeed. Hasn't been completely filled in, so let's leave it there. gives us more confidence. This daily level of liquidity, just as well as this one. And also we can now get rid of. First area of daily liquidity rests underneath or starts underneath 12,628, which is therefore a level that I would like to have on my charts, or want to have on my charts for the medium term, lower term time frame trades. If you want to mark out our latest daily swing point to get an idea for when you can talk of a trend shift at least, then have in mind this level of around 12,733. This is the aggressive lower high that you have here before a further push up. So then what is the first target box that you want to have in mind? It's this level starting at around 12,945. Lining up nicely also with a daily fair value gap. Basically is the same like the target box. What do I expect then for the week to come? Either a frantic push up before rejection, or maybe shallow pullback, and then you move up into this high time frame resistance area. Let me see. Any questions? Well, one question I regularly get obviously is, how do you frame your entries? Well, obviously there are a lot of different ways of how to frame your entry, but personally, framing my entry for me means that I go down at least to the 4-hour time frame, and maybe even further, as far down as, for example, the 1 hour if I'm looking for a long trade. And then I really start to also use indicators. Is it bad to use indicators? People always ask. No, it is not. But you should know when to use them. Personally, I think they are always secondary, and they're best used when you are trending. There are two indicators I really like to focus on. One is the Bollinger Band squeeze, marked out here with all these gray shaded areas, and also the volatility indicator that you see here, based on the Bollinger Band width. And what does it show you? If it turns blue, then you are at very low volatility. If you think about volatility, what does volatility actually mean? Volatility is contracting and expanding. If it is expanding, price is going to move. You are interested in looking for trading opportunities once you are in an area of low volatility, as you can see here, push up, or here you get the sign. However, as you're in an uptrend, there's nothing really for you to do, so you wait until here. Same story here. With the squeeze indicator, you're basically also looking for deviations that you can then take further up. Right then, let's move on to one more chart. Let's look at Bitcoin. And again, looking at the monthly chart, we see a very, very aggressive chart here and a very bullish chart as well. The monthly lower high was sitting at around 20,500 and we broke it in January already. We then consolidated, went down to the old all-time high, grabbed liquidity and rocketed up. Incredible trend. This is why I'm absolutely convinced the lows are in. And we may push up as far as 32 or even $37. Who knows? No one really does. We fell short of my target box that I've marked out here. I was hoping for this target box to be hit. Didn't happen. Now that for me basically means that I can pull it up. I wouldn't necessarily at the moment calculate with prices falling below or long-term falling below $20,000, $21,000 anymore. But what I believe doesn't really matter. The only thing that matters is the chart. You want to look for a massive buying opportunity should we get down here. Going down to the weekly chart, we see a similarly bullish chart. Weekly lower high now sitting at around $22,160. The weekly downtrend was broken here. It was retested. Our weekly target box at the moment, the first one, starts roughly, if we can close similarly to what we see here, starts roughly at $24,560. You see, we filled in, we rejected from this fair value gap twice, we rejected from a bearish target box twice, but then we rocketed through, even used it now as a launch pad, so to speak, and now creating a new massive fair value gap, which lets me believe that we will at some point get further down. Yeah. Don't forget, there's another weekly level of interest for us sitting at around $29,900. And we have weekly liquidity sitting at around 32,350, a level that we've already mentioned when looking at the monthly chart. Finally, moving down to the daily. to frame our trade again. Aggressive daily higher low sitting at around $27,120. Once you break this, you want to anticipate a bigger pullback at least. Where do we find daily target boxes? You see, it's always about confluence. Yeah? Should we make it down to this daily target box, you have a weekly target box sitting right above it. So maybe the lows are spiked of the weekly target box. You enter into this daily target box. You form out a new bullish setup and you take price higher. We have equal lows sitting here. So be prepared for the daily to grab liquidity down there before it might push up towards or further push up towards $30,000. So yeah, I would be looking for a short setup, maybe a bit higher, and only would want to focus on longing Bitcoin if either we take liquidity here, can then establish a new uptrend, or maybe even make it down here to fill in some of this and then take it higher. These are my two options for BTC to move further up. Before we sum up everything, there's one more thing that I would like to touch upon here today in my live stream. For that, let me pull up my presentation one more time and let me show you the following. I think what you need is a clear-cut approach to how to analyze your charts and how to carve out your setups. Hopefully what I've shown you here today is how you can roughly do it, working down from the monthly down to the 4-hour in my case. Why? Because this gives you a real framework. And if you have no framework, then invariably I think you will get lost, and therefore you will lose over and over and over again, and you will finally give up on trading. Your trade should be defined by the higher time frames, and your target should be defined by the higher time frames as well. This, however, doesn't matter that you need to enter on the higher time frames. What I do is I try to make a difference between long-term, mid-term, and short-term setups. What do I base my long-term setups on? The monthly and weekly. What do I base my mid-term setups on? The daily. And what do I base my short-term setups on? The 4-hour. So in other words, as long as my long-term trend is bullish, I want to focus on finding longs on the lower time frames in long-term areas of interest. Same goes for the midterm and the short term. As long as the 4-hour time frame for me personally is bullish, I want to look for long setups on the lower time frames, for example the 1 hour or 15-minute time frame in a 4-hour area of interest. What does that then basically mean, for example, for our setups here today? If you look at BTC one more time and you zoom out, for example, to the weekly chart, you then see that the weekly is absolutely bullish. Should we get down to the area of around $24,550, I would therefore then zoom in at least into the daily chart, maybe even the 4-hour chart, see whether I can frame a bullish setup within this area, my target box, and take it higher. Yeah, I might also consider putting in a limit order just like that, putting my stop then potentially underneath these lows at around 21,800, expecting price to show a reaction, potentially back up at least to old highs, or if the pullback happens first, for example, to take out these highs and get the liquidity up there, and therefore looking at a 3.3 risk to reward trade. Same goes for my midterm trade setups. Looking at the daily, where do we sit? To consider a short, I would need to see the daily time frame break. Then zooming into, for example, the 4-hour, I would want to identify a shorting setup to take price down into the area of 23,000. As long as this doesn't happen on the daily time frame, I'm only interested in longing, but as we are approaching really strong resistance at around $29,000-$30,000, and this is all very choppy, I would only consider day trades. Personally, I have a job, I'm working as a teacher, I couldn't really do it. Yeah. Why is this so important for me? Or why do I believe that this is the best approach you can potentially have for your trades? Let me also show you this. If you, for example, take the NASDAQ, here it becomes very clear. Just randomly going through the chart, starting with the 1st of August 2022, what would have happened? You would have looked at shorts on your longer term time frame trades, would have been a success. However, on the weekly, you would have looked for longs. Again, would have been a success. A daily, also identified on August the 1st, you would have looked for a midterm long setup, which triggered 10 days later and was a success. You can go through the list here. You can check these trade setups on the charts yourself. Just take a screenshot and you will see, if you follow this approach that I tried to show to you tonight here, you have one analysis that might give you various potential trade setups. Some of them might not trigger, some of them might fail. However, it helps you to hedge against different situations, and it helps you to be prepared. For me, the most crucial chart at the moment is the SPX Why? Because I believe most people don't pay attention to the monthly chart, and personally for me, the monthly chart has done something incredible on Friday. It has broken the downtrend on the SPX. So with that, we have a monthly uptrend on the SPX, we have a monthly uptrend on the NQ, we have a monthly uptrend on BTC. People are screaming recession, people are talking about fundamentals and the news. However, the chart tells us a different story. I believe there is going to be a nasty pullback. People are going to say, we told you so, we told you so. And if you then pay attention, you're going to get a massive opportunity to take price higher, longer term. With that being said, I hope you could learn something. I hope you could take something away from this stream tonight. Hope to talk to you soon again. Hope to be able to really establish something here, guys. If you like my work, then support me with comments, support me with likes, and subscribe, obviously. Take care, bye-bye, and good night.